Hey there, savvy investors, and welcome back to the Dividend Uncle channel. In today's video, we're tackling a topic that's crucial for anyone thinking about their future: retirement planning. I know, it might sound a bit dry, but stick with me because the insights we're about to dive into are incredibly valuable. I've received numerous requests asking how I calculate the amount needed for retirement, and today, I'm sharing that with you in a simple, easy to follow manner using Excel. We'll start with the basics, applying the 4% rule, then move into more detailed yearly cash flow projections and even consider scenarios of drawing down on investment capital. While I have more complex spreadsheets for personal use, today's focus is on giving you a foundation that everyone can understand and use. If you've got your retirement calculations down pat, maybe you'll find a new perspective or strategy in what I share. Now, let's get started on securing our financial futures for retirement. Understanding the 4% rule. Let's kick things off with the basics. We'll start by applying the famous 4% rule to our retirement planning. For those unfamiliar, the 4% rule is a guideline suggesting that you can withdraw 4% of your retirement savings each year without significantly risking running out of money during your retirement. To break it down, I'll be using an Excel sheet where I've input my current age as 45 and my target retirement age as 50, in B3 and before respectively. This will be giving me 5 years to prepare for retirement. Assuming my monthly expenses today are $8,000, and factoring in an average inflation rate of 2.5% over the retirement period, this monthly cost escalates to $9,051 in the future. You can see the formula used. Feel free to pause to see better. According to the 4% rule, I divide the annualized expense by 4%, and I've determined that I'll need about $2,750,000 saved up for retirement. Again, you can see the formula used in the bottom of the screen. The beauty of this method is its simplicity. However, this method has its limitations. For me, it doesn't account for varying investment dividend and returns of different investment portfolios, or annuities like the CPF Life. A deeper dive with yearly cash flow projections. In this section, we're diving into a detailed yearly cash flow analysis, extending from the age of retirement up to 85 years old. This means a retirement period of 40 years. This model is easily adaptable. For those planning for a longer lifespan, just add more rows. The spreadsheet includes other columns. The spending amount is in column D, projecting the necessary expenses over the years, factoring in inflation rates. Again, the formula is at the bottom. You can see the spending of $9,051 in the first year of retirement, and with each year, the spending is inflated further by 2.5%. In this spreadsheet, we're also integrating CPF Life's impact. I have assumed that I have sufficient money to be eligible for the enhanced retirement sum. Starting with a current monthly payout of around $2,300, and anticipating a 3% annual increase until the age of 55 when the CPF Life payout is fixed, the payout is projected to be approximately $3,091 from age 65. For this calculation, I've doubled the amount to account for both myself and my wife. This $6,182 is inserted from age of 65. Next, column F reflects spending net of CPF Life adjustments. This is just spending minus any CPF Life received. For the first few years before age 65, this column will be the same as the spending column. The next column, G, is for projected investment income I will receive. This is based on the investment amount in the last column, in column I, and the anticipated return rates. The investment amount in the first year is equal to cell B11, which we will adjust later. A crucial column, H, tracks excess savings or shortfall, highlighting the gap between investment income and the net spending required. This amount is added to the investment amount column in I, in the following year. In this spreadsheet, our strategy aims to fund expenses solely through investment returns, targeting a 5.5% dividend yield. This approach avoids liquidating investments, preserving capital. To find the necessary investment amount to accumulate at retirement, we adjust the investment amount in B11 until all years in column H post a positive balance. Let's try. For our case, the required investment amount tallies to about $2,500,000, demonstrating the amount needed to secure retirement funding while mitigating risk and preserving the investment principal. Considering investment capital drawdown. In next spreadsheet, I try to incorporate the scenario that selling a portion of the investment amount to fund spending is viable. The required savings will be lower but comes with increased risk, particularly if I'm selling in a market downturns. This approach could indicate the minimum retirement investment amount needed, offering a figure for more aggressive financial planning. Now, this spreadsheet is the same as previous one. But by allowing a sell down of investments to fund my spending, it means that the figures in column H can be negative. Any negative amount is the amount of investments I need to sell. The objective here is to try different amount of investment amount in B11, until the last column, that is the investment amount in column I, is never negative. To explain, if the investment amount becomes negative, it means I have exhausted all my investments. Alternatively, to be more prudent, I can set a threshold minimum, that the amount of investment can never be below $300,000. This means that the figures in column I must always be higher than $300,000. Let's do that for our current case. Adjusting for a sell-down strategy without depleting the capital below a $300,000 minimum, the necessary investment sum would be $1,970,000. The Dividend Uncle's take. Understanding your retirement needs and how to meet them can be straightforward with the right tools at your disposal. For those more advanced Excel users, you will probably laugh and say, "Hey, I can use solver tools or VBA coding." But as I mentioned at the start of my video, this spreadsheet aims to be a useful first step for viewers interested in calculating the rough amount of investments you will need for retirement. You should delve deeper into more details thereafter. For those who found the simple spreadsheet useful, and interested in applying these calculations in the spreadsheet to your own retirement planning, feel free to reach out at my email, which I will include in the description, or drop your email in the comments section, and I'll send over this simple spreadsheet we've discussed today. Retirement planning doesn't have to be complicated, and with a bit of guidance, you can chart a course to a comfortable retirement. Conclusion. I hope today's video has provided valuable insights into retirement planning through simple, actionable calculations. Remember, this isn't just about investment tips, it's about something even more fundamental, understanding the financial target for your retirement. Knowing your end goal is the first step in any successful plan. By defining what you need for a comfortable retirement, you can create a focused, strategic path to get there. Thank you for joining me in this essential exploration, and if you've found this content helpful, don't forget to like, subscribe, and share your thoughts in the comments. Let's continue to plan wisely for our future.